Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath. Okay, so let's just set the stage here.
Yeah, let's do it.
We are living through what might be, the two biggest industrial shifts of our lifetime, and they're happening at the same time.
Right.
In one corner, you've got the absolute explosion of artificial intelligence. The data centers, the power demand.
It's incredible. And in the other corner, you have this nuclear renaissance, this desperate scramble for clean baseload power.
Exactly. And for a long time, those two worlds were just sort of running parallel.
But now they're colliding. It's a massive, expensive collision.
And sitting right at that intersection, right in the middle of the crash site, really is Oklo. This isn't just a utility company, and it's not really just a tech stock. It feels like something, entirely new.
Right.
But here's the big question we need to answer today. Is this company a speculative gamble that's just going to burn up? Or is it a foundational piece of the future energy grid?
That is the question. Because if you look at the chart, it has been a wild ride.
Oh, yeah.
We have massive volatility, some huge partnership news, but also some very scary financial metrics.
Right.
So our mission today is to figure out if Oklo is actually worth the risk.
Let's start with a cold, hard reality, though. And really cold. Because when I look at the financials you sent over, there's a giant elephant in the room.
The pre-revenue elephant.
Yes. Looking right at the revenue line for Q3 2025, as of right now, Oklo is strictly a pre-revenue company.
Not a dollar coming in.
They don't have a single reactor turned on. They're not selling a single kilowatt of electricity. And for a company getting this much attention, that's a jagged pill to swallow.
It is. In Q3 2025, they reported a loss of 20 cents per share. And to be fair to the skeptics, they've missed consensus estimates in 3 of the past 4 quarters.
By how much?
By an average of about 20%. So if you're looking at this purely through a traditional value investing lens,
looking for PE ratios and cash flow,
you are going to run for the hills.
Right. So help me understand the other side of this. Why are people staying? Why is there so much hype and, a multi-billion-dollar valuation if the bank account is just bleeding out?
Because the market is forward-looking. Investors aren't buying Oklo for today.
They're buying it for tomorrow.
They're buying it for what the contracts say it will do tomorrow. You have to look at the strategic partnerships. The demand isn't hypothetical anymore. It's signed on the dotted line.
You're talking about the Meta deal.
Precisely. This is the game changer. Oklo signed a major agreement with Meta to provide a massive 1.2 gigawatt nuclear energy campus in Ohio.
Let's just pause on that number. 1.2 gigawatts. For context, that's roughly the output of a standard full-size nuclear power plant.
It is huge. And here's the key detail that the bears usually miss.
Okay.
Meta is providing prepayments.
Prepayments. So Mark Zuckerberg is basically funding the construction.
In a way, yes. Those prepayments are helping fund the construction, which is slated to start in 2026.
Wow.
And the timeline has the first phase coming online by 2030. So while the revenue isn't on the income statement today, the cash is being committed by one of the largest companies in the world.
That changes the risk profile significantly. That validates the technology in a way that 1,000 slide decks never could.
It totally de-risks the commercial side.
Right. If Meta is willing to prepay, they've done their homework. They don't just throw cash at vaporware.
Exactly.
All
We
right.
know there's a buyer. And it signals to the rest of the market that this tech is for real.
But there's another date on the calendar before 2030 that we need to talk about. The reports mention a Department of Energy milestone.
Yes, the DOE milestone. They're targeting reactor criticality, which is really just nuclear speak for turning the machine on and sustaining a reaction.
And when is that?
By July 4, 2026.
Independence Day. A little on the nose, isn't it?
Very symbolic. But if they hit that target, it positions the company for a massive revenue inflection point. Their first actual deployment is scheduled for the Idaho National Laboratory in 2027.
Okay, so the path is there. Demo in 26, first deployment in 27, and then the big scale-up in 30.
The map is clearly laid out.
Okay, so the map is there. But what about the gas tank? How does a company with zero money coming in survive long enough to build a nuclear reactor? This stuff is famously expensive.
That's the balance sheet question. And actually, for a pre-revenue company, they're sitting on a pretty healthy war chest.
How much?
As of the end of Q3 2025, They had approximately $410 million in cash.
Where's that come from?
A huge chunk came from their SPAC merger back in May 2024. That brought in about $306 million in gross proceeds.
And we can't mention the SPAC without mentioning the architect behind it. This wasn't just some random shell company.
You know, it was Sam Altman,
The CEO of OpenAI.
the very same. He was involved early via the SPAC, which was called AltCF. And the fact that the face of the AI revolution is the one backing the power source for that revolution.
That signals incredibly strong insider alignment. He knows exactly how much power his data centers are going to need.
It's vertical integration in a way. He's building the brain, and
yeah.
he's investing in the heart that's going to pump the blood.
But is $410 million enough?
Well, their free cash flow is negative, of course. They're burning cash. But let's look at where it's going. They're reinvesting in reactor pilots. They have a huge $1.68 billion investment planned in Tennessee for fuel recycling facilities.
So they're building out the whole ecosystem.
Exactly. They're even looking into medical radioisotope production. Remember those meta prepayments?
Right.
That reduces their need to go to the bank for high-interest loans. It lowers their cost of capital, which is a massive advantage right now.
Okay, let's pivot to the tech itself.
Mm-hmm.
Because when I hear nuclear reactor, I picture, giant cooling towers, glowing green rods.
It's Simpsons.
But Oklo says they're different. What's the Aurora?
The Aurora is their proprietary powerhouse. It's a fast-fission, small modular reactor, or SMR, and it's completely different from the traditional plants you're thinking of.
Okay, give me the specs.
Right.
How is this not just a tiny 3-mile island?
First, the size. It generates between 15 and 75 megawatts, so much smaller.
Okay.
But the cool factor, and really the economic moat, comes from the fuel cycle. The Aurora can run for 10 years without refueling.
10 years, you just turn it on and walk away.
Essentially, you install it, you turn it on, and it runs for a decade. And here is the kicker.
What's that?
It runs on recycled nuclear waste.
See, this is the part that blows my mind. They're taking the stuff that everyone else is terrified of and using it as fuel.
It turns a liability into an asset. Traditional reactors only use a tiny percentage of the energy in uranium. The rest is just waste.
Right.
Oklo's tech can harvest the remaining energy in that waste.
So what does that do for them economically?
It creates incredibly high switching costs.
Yeah.
I mean, if you're a customer and Oklo is handling your waste and your power, you're not going to switch to a competitor easily.
It's a very sticky business model.
And this tech protects them from the big incumbents. They aren't trying to power New York City. They're targeting off-grid niches.
Like data centers.
Exactly. Data centers like the Meta project or the Wyoming hyperscale project, industrial sites, military bases.
Places that need massive, reliable power, but might be in the middle of nowhere.
Or just can't rely on a shaky public grid. That off-grid part is crucial because the grid is becoming a huge bottleneck.
If you have to wait 5 years for a grid hookup, or you can just drop an Aurora on-site, that's a massive competitive advantage.
Precisely. It solves the speed-to-market problem for these AI companies.
And they have a regulatory head start, right? I saw something about a permit.
They do. They got the first advanced reactor site permit way back in 2019. That puts them years ahead of competitors who don't have these DOE-backed pilots yet.
Okay, so the story's good, the tech is cool, the backers are famous. But if I look at the stock chart, I might need a motion sickness bag.
It has been a roller coaster.
In 2025, the stock rallied 238% to all-time highs. Then it turned around and retreated 60%.
A massive drop.
Investors who bought the top are hurting right now.
It's brutal if you bought the top, but if you look at the technicals, this implies we're in a base forming phase.
Okay, explain that for the non-traders. What does base forming mean?
It means the weak hands have been shaken out. The pullback wasn't necessarily because Oklo did something fundamentally wrong. It was profit-taking and broader sector volatility.
The whole uranium and nuclear sector got hit.
The whole sector saw gap downs tied to macro events. It was a sector-wide shakeout, so the price stabilized because the people who were just chasing hype have left.
And the smart money is getting interested.
Yes, exactly. We're seeing unusual options activity. Smart money, so institutional investors, they're betting big with high options volume.
What does that usually mean?
It usually indicates they expect major volatility and speculative momentum. They aren't walking away, they're positioning for the next big move.
Betting on a bounce.
And despite the drop, the analysts aren't hating it. Texas Capital Securities issued a buy rating with a $138 price target just in late January 2026.
So they see a path to double or triple from the lows.
A significant path higher, yeah.
Okay, so if I'm holding this stock, or thinking about buying, what am I watching for in the next 3 months? What are the
Well,
catalysts?
all right, catalyst calendar. First, earnings. We're expecting the Q4 2025 or Q1 2026 report pretty soon.
More losses, I assume.
Yes, expect continued losses. But the market won't care about the EPS as much as the cash burn.
They want to see progress on the Meta and DOE timelines.
Exactly. And the big date is still July 4th.
That's the make or break.
July 4, 2026. DOE reactor criticality. If they hit that technical milestone, it proves the tech works at a regulatory level. It validates everything.
And we have some macro tailwinds, too. The political landscape seems favorable.
Huge tailwinds. You have the Trump administration pushing for a $12 billion critical mineral stockpile, which includes uranium.
So the government sees uranium supply as a national security issue.
Correct. And
What?
frankly, the AI energy crunch isn't going away. Money is rotating out of traditional tech and into the infrastructure that powers tech. SMRs are a huge beneficiary.
Okay, I have to play devil's advocate here. We've painted a pretty rosy picture. Sam Altman, Meta, recycled waste. But stocks don't drop 60% for no reason.
No, they don't.
What's the bear case? What goes wrong?
The reality check is simple. Financial risk. They are losing money. Persistent losses. Negative free cash flow.
Right.
If they burn through that $410 million before the revenue starts flowing, they have to raise capital.
Yeah.
And raising capital when your stock is down 60% is painful.
It dilutes existing shareholders.
Exactly. And then there's the government. I mean, nuclear is, well, it's nuclear.
And the regulatory history is the ghost in the machine here.
Yeah.
We have to remember the NRC actually denied Oklo's application back in 2022.
That's right, they denied it. It was mostly about information gaps, but the NRC is a very conservative body. They've made progress, but regulatory delays are the single biggest threat to any nuclear timeline.
If the NRC says no, or even wait, the stock tanks.
And it's highly sensitive to the news cycle. If uranium prices sell off or there's geopolitical tension, Oklo drops.
Yeah.
We saw a 34% drop in a single month recently just based on that kind of macro news. This is not for the faint of heart.
So let's wrap this up, put it all together for us. If you're looking at Oklo today, what's the final investment thesis?
I'm giving this a bullish score of 8 out of 10.
That's pretty high, given the risks we just discussed.
It is, but look at the positioning. The elevator pitch is undeniable. Oklo is at the exact nexus of AI data center demand and the nuclear renaissance. You can't have one without the other.
And the Meta deal proves it.
The Meta 1.2 gigawatt deal and those prepayments, they validate the tech before it's even built. You have federal backing, the fuel recycling moat, the recent 60% pullback.
An entry point.
For a long-term investor, it looks like an entry point, not an exit signal.
So this is not a day trade.
No, this is a multi-year hold. You're holding for the 2027 deployment and beyond.
High risk, high reward, backed by big tech money and federal interest. It's a fascinating setup.
It really is.
You know, I was thinking about something with that recycling tech. If Oklo succeeds, we effectively stop looking at nuclear waste as a problem to bury in a mountain. We start looking at it as a gold mine to power our AI future. It makes you wonder, what happens to the energy market when trash becomes the most valuable fuel source on Earth?
That is a $1 trillion question.
Thanks for listening to Smart Wealth with Joshua. See you next time.